All right, let's talk about the markets, because February 4th was, well, it was a wild one. We saw a record high and a total nosedive, all in the same day. So let's get right into what exactly happened.
This is the question on every investor's mind, right? 1 minute, everything's soaring, we're hitting new highs, and then, boom, the floor just drops out. So what on earth just happened? Is this just a one-off, a blip on the radar, or is it something bigger?
Okay, I'm going to give you the punchline right up front. This wasn't just another down day. No way. This feels like the start of a major shift, a real change in how the market is thinking, especially about that AI boom that's been driving everything lately.
So to really get what went down, we got to look at the numbers. And believe me, the data from that day's trading tells a really interesting story.
Okay, look at this. This is what's so fascinating. You've got the Dow, which actually hits a new all-time high during the day before ending just a little bit down. But then, look at the Nasdaq. It got hammered, plunging over 1.4%. That's more than 4 times the Dow's drop. This tells us it wasn't a sell everything kind of panic. This was a targeted hit on tech.
And that right there brings us to this big idea, a market phase shift. You know, for a while, it's been all about AI optimism. Just slap AI on your company name and watch the stock price fly. But now we're entering the AI reality check phase. Investors are starting to stand up and say, okay, that's great, but show me the money. Where are the profits from all this spending?
So what caused this sudden reversal? Well, it wasn't just one thing. Think of it more like a perfect storm, where 3 key triggers all hit at the same time. Let's break down exactly what they were.
First up, and this is the big one, the great tech sell-off. After the incredible run these stocks have had, a lot of investors just decided, you know what, it's time to cash in our chips. We're seeing money just flow out of those huge tech names that have been leading the charge for months.
And this chart just lays it all out, plain as day. The Nasdaq, which is just stuffed with those tech giants, was ground zero for the sell-off. It was so heavy it dragged the whole S&P 500 down with it. Meanwhile, the Dow, which has less tech exposure, held up way better. It really paints a clear picture. Okay, factor number 2. This one's a little more subtle, but it's a huge warning sign. It came from the bond market. And for those in the know, what happens in bonds is often a little preview of what's about to happen as stocks. The US 10-year Treasury yield shot up to over 4.2%. Now, why does that matter? Well, that yield is basically the risk-free rate of return. And when that goes up, it makes those high-flying, super risky tech stocks look a whole lot less attractive. Why gamble on future profits when you can get a solid guaranteed return right now from a government bond? It's a huge incentive to sell.
And that brings us to our third and final factor. And it's a simple one, fear. Plain and simple. There was a huge spike in anxiety, and you could practically feel the nervousness ripple through the market as the day went on.
So how do we measure that fear? We look at the VIX index. It's literally nicknamed the fear gauge, and it jumped, get this, over 10% in a single day. When you see a spike like that, it's a massive red flag that investors are getting really, really nervous about what's coming next.
And if you need any more proof that things are getting weird, just look at precious metals. Gold and silver had these absolutely wild swings. After getting crushed the day before, they came roaring back with huge gains. Let me be clear, this is not normal. This is what a jittery, unstable market looks like.
Okay, so we've established that this feels like a turning point. So the natural question is, what's next? What are the big risks on the horizon that we all need to be watching for?
All right, there are 3 immediate risks that are on our radar. First, the big one. Is this tech sell-off the beginning of a bubble bursting? Second, we're worried about market fragility, the scary scenario where stocks and bonds fall at the same time, giving investors nowhere to run. And third, you can never ignore it, the risk of geopolitical stuff, like tensions with Iran suddenly boiling over.
And let's just focus on that first risk for a second, the tech bubble. This isn't just fear-mongering. Seriously, if the market really turns its back on the AI hype and those profits don't show up, well, history tells us that stocks in previous bubbles have dropped by 80%. 80. It's a real possibility.
Okay, so we've broken down the what and the why. Now, let's get to the most important part. What do you do now? Because your next move really depends on what kind of investor you are.
If you're a long-term investor, think 6 months or more, the advice is simple. Do not panic sell. This could be a good time to rebalance your portfolio. Maybe trim some of that tech exposure and focus on solid, quality companies. The one thing you don't want to do is chase those bubbly stocks. Now, if you're a short-term trader, it's a totally different game. You need to be nimble. Watch those earnings reports like a hawk and manage your risks super strictly. Avoid big gambles right now and maybe stay away from the craziness in metals.
Okay, let's look ahead because the rest of this week is absolutely packed. The market's direction is probably going to be decided by 3 huge events that are coming right up.
So get your calendars out. Wednesday, we've got Alphabet earnings. Thursday, it's Amazon's turn. These two are going to be the ultimate AI reality check. Their numbers will tell us a lot. And then on Friday, we shift to geopolitics with the Iran nuclear talks. Any one of these could send shockwaves through the market.
So look, if there's just one thing you take away from all this, it's this. The game has changed. The era of just buying any stock with AI in the name and making easy money, that's probably over. From here on out, being adaptable and actually picking the right companies is going to be crucial.
You could say the second act of the AI revolution has just begun. The hype is fading, and now it's all about results. So the real question, the one you need to be asking yourself, is how are you going to navigate it?
So what's your plan? Are you selling tech, buying this dip, moving into different sectors? I really want to know what you're thinking. Drop your strategy in the comments below. Let's talk about it.